Hello traders, and welcome to Weekly Market Outlook for May 5th to May 9th. We're heading into a high-impact week with major pairs like DXY, gold, and euro sitting at critical levels, and the economic calendar is packed with key events that could drive significant market moves. This week kicks off with fundamental catalysts, including multiple speeches from FOMC members, jobless claims, and the market's reaction to last week's NFP report. In this video, we'll analyze where liquidity is building, which zones smart money might be targeting, and how to position yourself accordingly. Whether you're a swing trader or an intraday strategist, this breakdown will help you stay one step ahead with a clear, structured game plan. Let's start with the economic calendar and identify what could move the markets this week. Let's take a quick look at the economic calendar and map out which days will be active in the markets and which days will stay on the sidelines. Monday is a trade day. We've got a red folder news event scheduled, so we can expect some volatility early in the week. We'll be watching closely for any sharp moves or liquidity grabs. Tuesday is more of a waiting game. With no significant news on the calendar, it's a sit-on-hands day for us. No trades unless something really clean presents itself. Wednesday is shaping up to be a high volatility session, with 3 major red folder events lined up. This could be the most reactive day of the week, so we'll be extra cautious and focused on how price behaves around key levels. Thursday looks like a high probability trade day from my perspective. If we get the right setup aligned with the overall narrative, we'll look to execute with confidence. And finally, Friday wraps up the week without any major economic releases, which could lead to a slow or ranging market. So we'll be cautious here as well, possibly protecting profits or stepping away early. Now that we've got the fundamentals in place, let's move on to the charts and see what price action is telling us. Starting off with the DXY monthly chart, we had been anticipating lower prices over the past few weeks, targeting the monthly fair value gap, and price has finally tapped into that level. Last month closed with a strong bearish candle, but now that we have entered a new month, we are seeing signs of rejection from that FVG zone, hinting at a potential shift in momentum. Dropping down to the weekly time frame, after hitting the monthly FVG, we saw a solid rejection. Pricer closes within the weekly range and formed a CRT setup combined with an inside bar, which adds extra confluence and makes this a high probability CRT. We also have a body close above the previous week's high, and we have clearly defined a range high and range low. Our immediate upside target is the weekly fair value gap. The 50% of this weekly range acts as a low-hanging fruit, an easier liquidity target. If price manages to close above that FVG, we can expect further bullish continuation, aiming for the opposing end of the range. Now on the daily time frame, price pushed higher from the order block we shared earlier in our Telegram channel. Interestingly, it also formed a new order block and a fair value gap overlapping at the same level, which adds strength to that zone. We saw a nice rejection from that area, reinforcing bullish sentiment. Looking closely at Friday's candle, it closed within Thursday's range, forming a daily CRT, which is an additional confluence supporting the bullish bias. Within the weekly FVG, there's also a daily volume imbalance, making that our first short-term target on the buy side. So overall, my bias on DXY for the upcoming week is bullish, with clear targets above and solid confluences across all time frames. Now let's take a look at the majors, starting with EURUSD on the monthly chart. Just like DXY, EURUSD tapped into a major monthly liquidity level that we had been anticipating for the last couple of weeks. Price reacted cleanly with a strong rejection, confirming that liquidity grab. Moving to the weekly time frame, after sweeping that monthly liquidity, we saw a solid rejection and formation of a CRT plus an inside bar setup, another high probability reversal setup. Here's our defined range high and range low. A weekly fair value gap has also formed, and we will be targeting that as the first draw on liquidity. If price closes below that fair value gap, the expectation is to continue lower, targeting the opposing end of the range. Now switching over to the daily chart, after taking out the buy-side liquidity, price showed a clear displacement to the downside, showing a change in the state of delivery. That makes this last up-close candle a high probability order block. As we shared earlier in our Telegram, price moved lower from that daily fair value gap and followed through beautifully. Now we see price has closed below those up-close candles, leaving behind another fair value gap, which also got a clean rejection. Friday's candle formed a daily CRT, adding more confluence to the downside narrative. So going into next week, my bias on EURUSD is bearish, with expectations for price to move lower into that daily fair value gap as our next liquidity draw. Now let's take a look at gold, starting with the weekly chart, since the monthly structure isn't very clear at the moment. Gold is still in a bullish trend, but we've started to see signs of rejection at the top, and price has now closed within the range of the previous weekly candle. This gives us a classic weekly CRT setup. Here's our defined range high and range low, and just below that range low, we have a weekly imbalance, which becomes our primary downside target for the upcoming week. Dropping down to the daily time frame, we can see that price respected a bearish order block and moved lower. We've now got another bearish order block as price closed below the up-close candle, and it also formed a daily fair value gap. My expectation is for price to push higher first, likely forming the high of the week within that fair value gap, before continuing lower. Interestingly, this daily FVG overlaps with the weekly FVG, adding more confluence and making it a strong draw on liquidity. Zooming in further to the 4-hour chart, we can see how well price has been respecting the bearish PD arrays. Last week, I was anticipating a drop from the 4-hour FVG, which played out perfectly, as shared in our Telegram, delivering a move of over 1,500 pips to the downside. Now, we're watching another 4-hour fair value gap, aligning perfectly with the daily FVG. I expect price to run the buy stops above, tapping into that daily FVG and 4-hour order block before reversing to the sell side, targeting the weekly FVG, our main liquidity draw for the coming week. I hope you enjoyed this video. If you found it helpful, don't forget to like it, and let me know in the comments which pairs you'd like me to include in next week's analysis. Looking forward to your feedback. See you in the next one.